This week has seen something of a mini price crash, I think it's fair to say, in oil. Price of oil lost almost 10% in one day. So with crude now trading below $100 a barrel, is this the start of a much deeper sell-off, or is this just another buying opportunity? I know what I think. I think there's a trade to do here, and I'll go through the positives and the negatives during this video. Hello, I'm David Jones from Capital.com, and I thought we'd do an update on oil today, given the fact it fell so sharply yesterday. I think it's the biggest one-day fall in a few months for oil. So I thought, well, let's do an update as it's back below $100 a barrel. So as usual in this video, I'll go through some of the recent news about oil, why we saw it fall so much, the levels to watch, then we'll jump on the platform and do a trade. And I do think there is a trade down here, given the size of the move that we saw on earlier this week. If you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. It means we can continue to push out lots of different content on various markets throughout the week. Right, let's get into it and take a look at oil in a bit more detail. So as with many commodities, it's been quite the year for oil. A lot of focus on energy this year because, of course, not least because of the Russian invasion of Ukraine. So at its peak this year, not long after that invasion, the price of oil was up 70% for the year to date. We have seen it back away since then from those highs up around $126 a barrel for West Texas crude. Because of course there are other concerns out there. We know that inflation continues to be the big economic theme around the world for investors, and there have been concerns that inflation could reduce demand for oil. You know, if people stop spending, then less stuff gets shipped around the world. If economies contract, then it's going to affect demand for oil. And this is one of the reasons we saw it fall so sharply. So we've seen the biggest daily percentage drop since March. So we've got to go back about 4 months to see a one-day drop of this size in oil. And it's really on fears of that global recession, of economies contracting around the world, particularly, I think, in relation to China, with concerns there that if they're not in recession already, they're on verge of recession. So that's the reason we saw the price of oil sell off really sharply. So it was, a dramatic fall, but the industry still warns of tight supply in the oil market. So the industry is of the opinion, and perhaps they'll be a little bit biased, that supply is not about to overwhelm demand. We've just seen this week, I think, a threat by oil workers in Norway has been stopped. They were threatening to go on strike, which again would have disrupted supply. So the industry says that supply is still tight. So we've still got a bit of a tug of war between supply and demand in oil. So this one-day fall makes for great headlines, dramatic move, biggest move in almost 4 months. But whenever we've seen oil slip below $100 a barrel, we've seen the buyers come out. So we have seen the price well supported on dips below $100 a barrel, which brings me to the trade today I'm going to do. But before we do that, let's just take a look at some of the levels to watch. So for me, you can see $95, the April low, 25th of April low, and $95.80, where it slid so far this month. So there has been a lot of support for oil just below $100 at $95. So I think that's a really interesting level to watch. If we're going to see it bounce back, then my first target, will be a run back up to yesterday's high, just ahead of $110 a barrel. So I think there's definitely scope, if we did see a bounce back here, for quite a bit of upside. But as usual, to try and figure out, should it be a buyer or a seller? Let's jump on the chart and see if we can get the trade set up. I thought I'd start off with a 5-minute chart so you can see the dramatic sell-off on the 5th of July. So it started from about 1 o'clock and the market was trading about $106.50 a barrel. And you can see within 5 hours, the market had traded down to 96. It's a big move. It's a $10 move in the oil price. So almost 10%. Let's take a step back though and look at the bigger picture. Just a quick reminder of where we've come since the April lows in 2020, when oil cash price was down around $10, $11 a barrel. That big trend still very much intact. Let's zoom into this year. If we take a look at the RSI, first of all, there is something interesting going on with the RSI. The market, or the RSI, went oversold in late June. And the market price of oil did rally. The market has clearly turned down once more, but the RSI is perhaps about to make a higher low. And this is known as divergence, bullish divergence in this example, where the market slips to a new low, but the RSI makes a higher low. It can be a suggestion that perhaps the weakness is running out of steam, which makes it interesting for me for this trade. I don't pay attention to RSIs very often, but I do pay attention to this idea of divergence because it's quite a rare thing to see happening. So there we go, a bit of bullish divergence in the RSI. Let's go back to the chart. For me, this is quite a simple decision. If we look at the market after the peak, following the Russian invasion, that second week of March peak, where the market ran up to 126.5, got knocked back to 92, as we can see in March, knocked back again in April to 92, and then pretty much since then, whenever we've seen this market dip below 100, it hasn't stayed there for very long. You know, the price of oil has been in a sideways range pretty much for the last 4 months almost now. So whenever we've seen the market down at these levels, we have seen buyers come back in. So that for me is the trade. I want to be a buyer at the lower end of the range, which is where we are now. The only question is, where does my stop loss go? For me, probably the most conservative stop loss here would be the other side of 92. The lows from March, these big levels. A more aggressive stop loss might be below yesterday's low. So below 95.80 or maybe even below 95, the lows from April. Perhaps that's the level I'll do. Perhaps I'll split the difference between 92 and 95 and I'll go $93.50 is where my stop's going to go. So the other side of the low from yesterday, the other side from the low from April, because I am taking the view the market's overreacted here and I'm expecting it to snap back. And when it comes to snapping back, what's my target? Well, my first target is going to be a run back up to yesterday's high. It's probably not going to happen in a day, but I think if we think the market's overreacted, then perhaps clawing its way back to where it was for much of the last week of June seems logical. Let's get the trade on. Okay, I'm ready to go. So the price is trading just below $98 at the moment. I'm buying 80 barrels where the market's trading now. I'm putting a stop loss in, of course. Stop loss is going in at $93.50. So my risk on that trade is around £300, the usual risk. You can see where the stop loss is on the chart, the other side of the lows from the last 2 or 3 months or so. That's it. I'm ready to go. Let's send the trade through. So the trade's in, buying 80 crude at 97.98 in the end. And for me, you know, we have to take out these lows, these $92 lows from March, to suggest that we are seeing perhaps a reversal in the fortunes medium term for crude oil. You know, medium term, I think I've said this a few times, I think it's quite a boring market in that it just flip-flops around. But when a market is flip-flopping in a sideways range, there are still opportunities. So I'm trying to take advantage of a move to the bottom of the range. Let's see how it works out. That's it for this update in oil. So I think it's a knee-jerk reaction that might be overdone. Let's see. The trade's on, the stop's in place. Let's see how it works out. We'll come back, we'll do an update. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.